Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, and the SPY for the week of June 2nd, 2025. And with that said, let's go ahead and hop straight into the data. Now, this is going to sound a little choppy with my other part of the video I have recorded because technically I already recorded this part, but my microphone didn't work in the very beginning of the recording, so I'm going to kind of catch up to the other part of the video and cut back to it. So if it sounds off, I apologize. Um, Monday, we have the manufacturing ISM PMI data. I'm really not expecting the market to move a lot from the ISM data at all. Or from the manufacturing ISM data, we already know manufacturers are having to increase their prices. I don't anticipate that to move the market a whole ton. The forecast is expecting both the revision and the current reports to come in slightly hotter, which generally that's a bearish thing for the market. However, I think the current narrative might actually make this data helpful for the market because it's going to help with our GDP. Um, we have Chair Powell speaking on Monday as well at 1 p.m. So that's going to be a very important speech. I don't know what he's doing. I don't know if this is a meetup with business leaders or anything, or if it's an actual major economic speech. I have no idea. I just know that um, we will be tracking it, and uh, you should as well, whether you use Bloomberg or um, the Unusual Whales bot. We do have that on our Discord server for $1 a month, compared to the 50 something dollars getting it through Unusual Whales. So consider that. Not trying to advertise the server at all. Now Tuesday says right now, the market will be volatile when he speaks. Uh, that's just kind of the way it is right now. Now, Tuesday, we have the factory orders, and that's another revision for April. Um, and then that's a revision for April for the job openings. So, factory orders is looking to be negative. That really shouldn't be moving the market a whole ton. It can. I just don't really expect it to. Usually these data sets don't move the yields a whole ton. So, like I said, I could be wrong, but we will see. Now, Wednesday, we do start getting some of the more important data. Now, this is the non-manufacturing PMI data, so this is from the the actual not the producers of items, but the actual just uh, sellers of items. Now, these numbers are pretty important to see, and we are expecting these to go up. So, generally, that's going to be, you know, bullish for the yields, which means it's very likely going to be bearish for the market. Now, it doesn't mean I'm expecting some market dump off of this news or anything. Um, I'm just saying that, potentially that this can be bearish news. Okay. Um, doesn't mean it will come in bearish. Potentially the market can rally from this. I have no clue right now. I'm just telling you what I normally track. Normally this going upward would be a bearish thing. Okay, because that's directly saying that our retailers are moving their prices up. So um, we'll see how that is for the market. Now, Wednesday does have the biggest data set that I'm looking forward to, and that is the Beige Book. And I know many don't read it. I don't expect many to. It's usually like some 40-page plus report, but it goes over each of the different Fed districts, or for the central banking districts, and they go out and ask local businesses, how the hiring is, um, you know, how the consumers are, if they're having to do layoffs, if they're not. So we get real data from on the ground. It's not data that's going to be skewed or anything. It's not data that um, is audited in any way. It's just straight from the businesses. So to me, it's one of the most real data sets you can read. That's telling us exactly what the Fed is hearing from local businesses. So to me, it's very important to read. Now, I know a lot of people again aren't going to read some 40-page document, but with AI, you can copy and paste it, at least the summary page, which is usually at least like 1 or 2 pages long. You can copy and paste the summary into an AI right now and get a pretty good idea of what the beige book is saying. So I do suggest doing that. Everybody should be keeping their eyes on the beige book because it will tell us if uh, the market, or not the market, but if the economy is starting to see weakness or strength, and it's just a very good way to know the general sense of what's going on in the economy. Probably one of the best data sets you can read, honestly. So Thursday, uh, we have the jobless claims. I'm not really anticipating anything crazy from them. And then let's see, we have a NFP. That's just a revision. That shouldn't do anything too much. That's just showing an increase in the production technically. Um, so that can be slightly bearish, but because it's a negative still, I would consider that bullish. That's a little harder to read, but we'll see as that data set comes in. That's at 8:30 again on Thursday. Now, we don't really have any important data on Thursday until basically 3:30, which is when Harker is speaking, and Harker doesn't always say the most important things, so it can be kind of a back and forth on whether that's actually going to help the market a lot. And that's kind of what I've been saying a lot about these data sets is that we have a lot of data this week, but not a whole lot of stuff that's really going to push the market around a whole ton. Um, I can be wrong about that. Some of this data can come in super cold or super hot, where it's above or below speculative, like where everybody has been speculating the data to be, and that can cause the market to rally or dump from that. But again, so far, none of these data sets really are telling me that, other than the Powell speech. Uh, the Beige Book, a lot of market participants don't really look at the Beige Book, which is unfortunate, but sometimes that can cause major moves. So far, really nothing yet. Now, the important day is on Friday, and basically we get all of our important data sets right at 8:30, and that's the NFPs, the non-farm payrolls. Sorry, I'm like losing my voice right now. Sorry if it sounds all scraggly. And the unemployment rates. So that's super, super important because the labor market is still a major part of the narrative right now, and this is going to be telling us what's going on with the labor market. Um, a lot of people have been giving us conflicting data between both weakness and strength. So that's what the NFPs will really kind of help us with, and the unemployment, will help fill some of those gaps so that the market can really build the narrative of, are we seeing weakness in our economy? Are we seeing the GDP coming down? Or is this just a bump in the road and are we going to see this start picking back up? So, um, again, this is kind of a weird week. A lot of this data might seem like it's supposed to be bearish, but technically it could be pulling us in a positive GDP direction where this normally bearish data can be bullish for us. So it's a weird week. Just be aware of that. Okay. The big move again should be on Friday. Now, going into earnings this week, we don't really have anything super, super important, but we do have a couple I want to mention. So, we do have a CrowdStrike on Tuesday in the after hours. I I'm not really going to speculate on where that's going. I just know that it's a super important one, so that's something to keep your eyes on for Tuesday afternoon. And on Thursday we have Broadcom, which that one is super important. That's a massive semiconductor company, so that's basically the earning to keep your eye on for this week, and that's going to be Thursday in the after hours. So any movement from that won't be really hitting us until that Friday anyway. Um, Anything in CrowdStrike, if it has like some massive failing earnings or something, we won't be trading that until basically Wednesday or Thursday anyway. So, not a super exciting week out of earnings. Now on Thursday we also have Lululemon. Uh, I'm losing my train of thought. Sorry, I got a text. No, we have Lululemon in the after hours. I know many in here play or trade Lulu. I usually try to trade Lulu as well, so very likely I'm going to be playing that. I have no idea which way. As always, I usually trade straddles. That means both calls and puts, so I don't like to really focus on a directional trade. I'm not going to be charting out Lulu or anything, but you know, I'll talk about that in another video if I decide to jump into it, for a major play. Now, for earnings, that's kind of all we have for the week. Again, it's really on Broadcom for Friday for the end of the week. But other than that, that's the earnings. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, we're going to start with our daily time frame, and we are going to go over our Bollinger Bands and our moving averages. And let's get straight into this. Hold on. Okay, so the market closed at 589.39 on Friday, and the 5 mile is currently at 587.49. So that means very likely on open tomorrow it's going to be very close to that 588.30 range. Um, but we are seeing some selling in the overnight right now, and I'm not too concerned about this right this moment. But if we do open at this level, at this 586.50 range where we're currently at right now, then it's very likely we see the 5 mile stay pretty much where it's at right now, which is that 587.49 range. Now we have the 10 mile at 588.53. Uh, Again, a lot of the market direction is going to kind of be determined tomorrow on Monday. So if we start to sell off tomorrow, then this 10 mile is going to start pulling down towards the 585 range. But if we do not, if we reclaim a lot of this selling weight right now, then we're going to see the 5 or the 10 mile support being pulled above that 590 range very early this week. So that's good. That's our midterm support uh, is at pulling above that 590. That will be very strong for the market if we continue heading upward, right? Now our 20 mile is starting to really catch up to us. It's at the 580.64, so by Monday, Tuesday, it's very likely going to be at the 581 range. If we continue upward, it's going to be pulling towards that 585 range very quickly. Um, Even possibly even the 590, depending if we start really pulling towards that upper Bollinger in the actual market price. So our monthly support is pulling up pretty significantly too. Okay. The 200 mile is at 574.54. Now this seems like it's pulling up slowly, but it's actually been picking up pretty quickly. And obviously that's going to pick up very quickly because this has been the largest rally in market history. It's the strongest month in trading history. So of course we should see the 200 mile pulling upward very quickly from that. Um, Still has a good range between that 20 mile and the 200 mile range, but we do have to be cautious with this 200 mile moving upward so quickly. It can catch back up to us very quick. Um, Now it's not going to be pulling up to the like 580 range for another, whole 3 weeks from now, 4 weeks from now. So, um, in terms of being quick, it's still a whole month or two away from trading at this level. Uh, but time moves by fast. It's already June. Can't believe it, but it's already June. So, the upper Bollinger is at 605.41. This is going to continue pulling upward. It doesn't look like it's pulling upward right now, but it is, and that's because the 20 mile is pulling upward. And the way we have our Bollinger Bands tracks the 20 mile. If you can tell on your chart, the 20 mile and the middle band will actually be sharing the same value. That's because, they are the exact same thing. The lower Bollinger is at 555.87, so it's almost right at our 50-mile range, which is at 558.74. Um, this is going to continue pulling upward, and it'll pull above our 50-mile range, which is that is a bearish or a bullish sign. That's saying our essentially the Bollingers are the edges of the road. If you were to consider this as, pretending you drive in the middle of this, right? This is your roadway with, the roads are pretty uneven. But your upper Bollinger is the left side of the road here, and the bottom Bollinger is the right side of the road. Um, that's how I try to think of the Bollingers. So they're the sides of the road. Sometimes you can go off the road a little bit, but generally you try to stay in the middle of your lane, like a good driver. Doesn't always happen, but that's what the market tries to do for the most part. So, um, that's how I like to think of the Bollingers. Now, discussing the Bollingers, the market is going to be making a very, very huge decision, very likely Monday or Tuesday this week. And that decision is testing the 5 mile and where are we going to go from the 5 mile. So that means testing that 588 range, and I'll discuss the 5 mile upper bounds and lower bounds in a moment here. But assuming we're going to be testing that range, and I'm assuming right now it's happening in the overnight session as we speak. Very likely going to try to cut most of the retail traders out of the actual moving average test. Now, we did fully test that range on Friday. Um, we went all the way to the very lower bounds of the 5 mile and all the way back up to the upper bounds. So, to me, that was a very quality 5 mile test. Now, it really depends on how they want to do it on Monday, but because we're at that 5 mile range right now, either we're going to bounce and head upward to this upper Bollinger, or we're going to break down and start heading to the 20 mile. Um, Very decisive. It should not continue bouncing up and down this range. Um, the reason why is because we are starting to see the moving averages consolidate here, and that means pull together. Um, when the moving averages pull together, that means there's not a lot of room for the market to move outside of that. So, um, it's building for a move from this 5 mile. We've already tested it for a whole session now. Um, Very likely we won't see a whole another 5 mile test. Very likely we either see the full rejection or the bounce from here. Um, if we do reject, then you look towards that 20 mile range. If we bounce, then you look towards the upper Bollinger. There's really no way around that. That's just how you trade the 5 mile. Now, one thing that is bearish here, that I did discuss on Friday, is that the 5 mile is currently underneath the 10 mile. But if we do have a bullish day tomorrow, then that will change. We will see the 5 mile pulling above the 10 mile, and that puts us back in bullish territory again. Um, but the 5 mile crossing under the 10 mile is the first uh, bearish signal I look for. So we were in that territory, and it's starting to close back up again. It can pop back open, and we can see the market trade down to the 20 mile and see the 5 mile pull to the 20 mile. Um, but with this closing, as you can see right here, to me, it's very likely telling us that it's going to break above, and we're going to see that upper Bollinger range. Um, and another thing I want to talk about, and let's just go over the daily structure. But if you can identify it, we have a really massive cup and handle building. Let's go ahead and turn on drawings. My drawings decided to mess up on me because I pulled my phone open. Alright, let's just go over it. So I modified the major buying channel and adjusted it properly. So has that bottom support, and because we're at that bottom support, we need to take the structure above it, and this is the selling structure that created the movement to fill out this buying structure. I know that may not make a whole lot of sense right now. I'll explain it in another time. Um, Oddly enough, that candle I will have to look at later. Um, anyway, I'm gonna ignore that for now. But we have a cup right here. Okay, drawing tool, and from this cup we have potentially a handle forming. Okay, and so far that looks like a little cup. Okay, and that's kind of what you want to see out of a handle. So right there, and out of this miniature cup, we expect a handle to break us out. And that's kind of what this 5 mile test would do. It's either going to cause us to push upward and break this major selling channel, or we're going to reject and head downward. Okay, so that's the bullish thesis on the daily time frame. Um, I'll go over it on the hourly in just a minute here, but I wanted, show the bearish thesis as well really quick. Now, the bearish thesis is that we are still in this massive selling channel. We have this super large inverse cup, which goes down all the way over there. Sorry that decided to mess up, but we're just going to keep it there for a moment. It goes down to there, but you have this super large inverse cup, and from this large inverse cup, we create a large inverse handle. Okay, and that's the bearish thesis, is that we're staying within this major selling channel. We are going to double top in this area, and from this, we are going to create a major head and shoulders. And from the head and shoulders, we are going to break down and finish the inverse cup. Okay, so that is the bearish thesis on the daily time frame. Sorry, I just want to make sure that these are all colored properly. And again, for my colorblind viewers, the bearish structures are purple and blue. Bullish structures are going to be yellow and green. So that's the bearish thesis. Let's go over the 4-hour chart, and I would like you all to follow on your hourly chart. But for me, it just shows a lot easier on the 4-hour chart to show to you all. But as you can see, the cup I was talking about right here is this cup right there. And from that cup can form a handle. And with this, we have bullish structure forming right here in the form of an inverse head and shoulders. So come tomorrow, if we see this bounce and start building liquidity right there, very likely that's going to lead to the breakout, and the breakout will, form upward to that 598 range, which will eventually lead to the breakout of the selling channel at that 601.70 range. Um, that's the bullish thesis. That's essentially what you're looking for, is that you're looking for this 5 mile test to bounce upward. Okay. Very simple day for the bulls. Yeah. Um, you're looking for the bounce. Simple as that. You're not looking for anything crazy. You're not looking for you're looking for the right shoulder to form in this inverse head and shoulders and head upward. Simple as that. Now the bears, they have it a little more difficult because they do need to see more structure form here. And the bear structure is going to form in the hourly chart. And what the bears want to see is this head and shoulders break down more. And this head and shoulders needs to form an inverse cup right here to the 580, excuse me, the 583.24. And from there, we need to start working on some of these gaps downward. This is one of the major gaps right there. So as you can see, all the way down to the 578 range, and what's right in that range right now, the 20 mile. So we can head downward, do a 20 mile test, and either head upward or downward from there. But that would finish out this bear structure perfectly. And we do have the bear liquidity to continue downward if we are going to see selling from here. So that's the bearish thesis. Now, am I leaning any one way or another? Overall, I am leaning bullish. I do think that this is going to turn into a large cup and handle. As you can see, we have the cup, we have the bear structure at the top of the cup, which we want. We have the bull structure potentially forming at the bottom of the cup like we want. From this bull structure, very likely we get a handle and head upward. So that's kind of the thesis from now. Um, a lot of this week is going to be determined from the next day or so of testing this 5 ma, and from there we're either going to head to the 20 ma or we're going to head upward to the upper Bollinger. So that's the technical analysis. I don't think I missed anything. I'll have to talk about treasuries later this week. I know I always say I'm going to do a video on treasuries, but this week I do mean to do a video on treasuries, so I should be able to go over that hopefully tomorrow, but we will see. Tomorrow's going to be a very busy day for me. Oh, one thing I did want to show on the daily time frame. The ADL, so this is kind of like the money inflow and outflow. If it's going upward, money is going into the fund. If it's going downward, then money is leaving the fund. We have a cup and a handle on the daily ADL. Um, you can do technical analysis on the ADL because it is the actual money inflow and outflow, so it does track a lot to the actual chart pattern. So technically, you can chart the ADL. I've done it in real time. It does work. So we do have bullish structure in the ADL as well. So to me, it's saying money is, heading into this, and likely we're going to head upward to the upper Bollinger, close this super large cup, which is, the top of it's at that 611, truly at the 613 range, but the SPY dividend takes away from the price. So yeah, okay, that's it. I hope everyone has an awesome trading day tomorrow. Have a great week, and I will talk to you all on Tuesday, or yeah, Monday, Monday afternoon, Monday night, or Tuesday morning. So have a good night. Have a good day. Talk to you later.